So I think, well, first and foremost, it says here, review income needs and cash flow. So in a nutshell, that's just getting a financial plan in place, especially if individuals are retiring on, the NLV and things like that, which seems to be quite a lot of individuals that we're getting at the moment. So understanding what your income goals are, what assets to actually draw from and take distributions from is a good first step. And then off the back of that, you can then start understanding what your potential liability is in Spain. And then it's actually reviewing the existing investment structures, getting yourself into Spanish permitted custodians, and then also getting yourself into EU compliant investments. So there's this thing called PRIIPS, which is actually an EU regulation, which doesn't allow individuals like myself or EU residents to actually buy US domiciled funds and ETFs. So essentially your custodians, if you now live in Spain, they might actually restrict you on what you can and can't buy. So actually getting this stuff in order and getting yourself into EU compliant investments with an EU compliant custodian is probably the biggest or one of the biggest financial decisions that you should do prior to moving, to make sure that you just alleviate some of those headaches moving forward. And then I guess the final thing is just, I mentioned in the previous question, is just realizing gains strategically, depending on the actual assets, for example, Roths, etc., to rebalance yourself before becoming a Spanish tax resident, so that you're not putting yourself into a potential higher Spanish tax bracket if you're realizing gains that have been unrealized for some time.
Brilliant. And well, Steve, I also wanted to cover in that part, like the second half of this question, looking at more of the currency specific decision that need to be made in that time bracket, like prior to moving to Spain?
Yeah, it's a great question. I can see some questions coming in with clients in that particular time period as well. But yeah, when you're coming to this particular point, what you need to be very astutely aware of from a currency perspective is how much the currency market is moving. And this is something that many clients today kind of don't fathom how impactful it could be on your budgets. So it's understanding the capital availability, so the visibility of when your funds are available or will be available in the future, and what those requirements will be. So here's some stats if it helps open people's eyes to the amount of movement that we've seen. In the last 30 days, we've seen the dollar to euro rate move by nearly 3% between the top and the bottom. And even in the last 3 months, so before the Iran escalation kicked off, it's moved by over 6%. So timing a transfer is really important. Things are bold and underlined here is politely, please don't leave currency on the to-do list at the end. Don't think it's just transactional. Make sure you're proactively reviewing that and discussing it with a currency specialist, rather than just pressing the go button with your bank or another.
Yeah, so I think it's important to differentiate the actual accounts first and foremost. You mentioned here, we've got brokerage account, we've got 529s and Roths. So if I kind of go through, first of all, how we review that. First of all, it's what type of structure is it and how does Spain see it? So all of these, even though they're different accounts and maybe taxed differently in the US, Spain will actually mostly see these as basically brokerage accounts, really. We then also need to look at what you're holding within these brokerage accounts and what level of unrealized gains you actually have. Final thing is to see what your income needs are, if any, from these accounts. So from those answers, we can then look at the different options that you have. So first of all is just to transfer the existing holdings into a Spanish permitted custodian like Schwab or Fidelity. Second point is if you do have ETFs, mutual funds that are no longer going to be EU compliant, is to conduct some sort of tax workout plan to start moving into direct securities, because that is one way that we can actually, first of all, make sure we're EU compliant is by using direct stocks and direct bonds to ensure that EU compliancy. And then I guess the third option, other than a Roth or a 529, is to, if there is low unrealized gains and we want to actually remove some of these assets from the US completely and reduce currency risk, which Steve will mention as well, is to actually set up some form of offshore investment brokerage account, which would be specifically designed for a US connected individual, making sure it's PFINC compliant, based in euros. We're then removing ourselves from the US, still US compliant, EU compliant, and reducing currency risk from there. On the 529s and Roths, it's as simple as just making sure we're rebalancing. A lot of people talk about, actually liquidating those accounts, but ultimately in a Roth, if you were to liquidate it and put it into a brokerage account in the US, then all you're doing is setting yourself up to actually report gains, etc., in the US and Spain. Whereas if you keep it within the Roth and rebalance it before you move, it's still going to be tax deferred in the US. So you don't have to worry then about the tax reporting and obligations in the US. But then you are going to, you're then just going to have to worry about the Spanish side. So it's just important to understand, what the different tax legislations look like. And obviously timing becomes important as to when to actually make these trades and what tax obligations are going to be key on that side of things as well.